If you think silver's 22% crash was random chaos, you're looking at it wrong. And I need to tell you that up front because what just happened wasn't a market failure. It was a market cycle doing exactly what cycles always do. Here's what everyone's missing: this wasn't an accident. It was inevitable, and more importantly, it was predictable. Let me explain what's actually happening here while everyone else is panicking. Silver didn't collapse because something broke, it collapsed because something built up. Too much leverage, too much optimism, too much belief that prices only go one direction. For months, excitement was everywhere. Social media was loud. Predictions were wild. Everyone wanted upside. Nobody respected risk. That's always when the trap is set. Here's the uncomfortable truth most people don't want to hear. When something becomes obvious to everyone, it stops being an opportunity. Markets don't reward excitement, they punish it. Think of markets like breathing. You inhale, you exhale, expansion, then contraction. You cannot inhale forever. Silver inhaled too fast for too long. Now it's exhaling violently, and this is exactly where most people destroy themselves. They believe price equals truth. They think falling prices means something is fundamentally broken. They confuse volatility with danger, so they do the worst possible thing at the worst possible time. They sell when they feel fear, and they buy when they feel safe. That single habit keeps people trapped. Look at history. Every major wealth transfer looked chaotic on the surface. Prices falling, experts confused, retail investors emotional. But underneath the noise, there was always order. Cause and effect. Pressure building, then release. In 2008, assets collapsed not because they were useless, but because leverage had to be destroyed. In 2020, markets crashed not because companies vanished, but because liquidity froze. The pattern repeats every single cycle. First, excess belief. Then sharp correction, then opportunity disguised as pain. Silver right now is sitting in that painful middle zone, and smart money knows it. So let me ask you the question smart money is asking: what actually changed underneath? Has silver stopped being used in industry? No. Has debt disappeared? No. Has currency printing stopped? No. Has human behavior magically changed? Definitely not. So what happened? Pressure. When interest rates stay high, leverage cracks. When liquidity tightens, speculative assets bleed first. And silver, being smaller and thinner than gold, always moves harder in both directions. That's not weakness, that's physics. Imagine two boats in the same storm, a cruise ship and a speedboat, same waves. Which one moves more violently? Silver is the speedboat. That's why smart money respects it and fears it. They don't chase it when it's popular, they wait for moments like this. Moments when sentiment breaks, moments when everyone says this time is different. It never is. There's a reason gold stays calm while silver panics. Gold protects wealth. Silver exposes cycles. When silver crashes this hard, it's not telling you silver is dead. It's telling you stress is building somewhere else in the system, usually in debt, usually in currencies, usually in confidence. This is how the system whispers before it screams. Let me give you a concrete example. In the early 2000s, silver was ignored, laughed at, forgotten. Then debt expanded, money became cheap, confidence exploded. Silver didn't move at first, then it did, and when it moved brutally. The same pattern repeated after 2008, long silence, sudden collapse. Then a multi-year surge that shocked everyone who sold too early. The people who made money weren't smarter, they were calmer. They understood one principle: price is the last thing to react. First comes pressure, then emotion, then price. You're seeing the emotion stage right now. And emotion is expensive. Here's the biggest mistake people make: they think they must act immediately, buy now, sell now, do something. But wealth isn't built by reacting, it's built by positioning. Smart money already planned for this level. They didn't guess, they didn't predict headlines, they watched structure. They watched how silver behaved at previous extremes. They watched where leverage piled up, and they waited. This level matters not because it's magic, but because it's where psychology flips. Above it, hope dominates. Below it, fear takes control, and fear creates discounts. Now, this doesn't mean silver goes straight up from here. Cycles don't work that way. It means the game has changed, weak hands are gone. Strong hands are watching. So let's talk about strategy, not hype. Real strategy you can actually apply. First, stop thinking in days and weeks. Start thinking in days as markets move in long arcs. The people who win zoom out. Second, separate price from value. Price is emotional, value is structural. Silver's value comes from scarcity, industrial demand, energy costs, and monetary stress. None of those disappeared in a 22% drop. Third, respect volatility instead of fearing it. Volatility is the fee you pay for asymmetric upside. If you want smooth, predictable returns, you get small gains. If you want meaningful upside, you accept discomfort. That's the trade. Fourth, never bet everything on one moment. Smart money scales in. They enter when fear rises slowly. Not all in, not all out. Positioning beats timing every time. And finally, the most important principle, the system teaches you the lesson before it gives you the reward. Right now, the lesson is fear. Later comes clarity. Most people won't make it to that second part because they quit too early. They always do. Years from now, people will look back at this moment and say it was obvious in hindsight. It never feels obvious in real time. That's why so few people win. Here's what most people never understand. They stare at the price chart like it's a verdict on their intelligence. Up means I'm smart. Down means I failed. But markets don't care about your feelings. They care about flows. Where money is forced to go, where money is trapped, where money has no choice but to move next. Silver's drop didn't start in the silver market. It started in credit, in interest rates, in liquidity tightening slowly, then suddenly. When money becomes expensive, speculation dies first. That's why the crash feels shocking but wasn't. Think about this: if silver truly had no future, it wouldn't fall fast. It would fade quietly. Fast crashes only happen when something important is being repriced. The system is stress testing itself, and silver is one of the first instruments to feel that pressure. This is why the smartest investors don't ask, will silver go up tomorrow? They ask, what is this move preparing the system for? Because every reset creates the conditions for the next expansion. Pain cleans excess. Fear resets expectations. Crashes create room. That's how cycles breathe. Right now, we're in the uncomfortable part where certainty disappears. And that's exactly where future opportunity is born. Most people won't act wisely here. They'll either freeze or chase the next shiny thing. Smart money does neither. They observe, they wait for confirmation, not from price, but from behavior. Are sellers exhausted? Is panic peaking? Is bad news no longer pushing prices lower? Those moments never feel safe. They feel lonely. That's why few people recognize them. Look back at any major bottom in history, stocks, real estate, commodities. The news was always terrible. Confidence was always gone. The crowd was always convinced it was over. And yet, that's when the groundwork was laid. Silver's volatility is not a bug. It's the feature. It amplifies mistakes and rewards discipline. If you treat it like a lottery ticket, it will punish you. If you treat it like a long-term cycle play, it can change outcomes. This is where thinking differently matters. Instead of asking how much can I make, ask how much risk am I actually taking? Instead of chasing predictions, build principles. Principles don't panic, predictions do. Here's a simple principle: when something drops fast, stop listening to opinions and start watching reactions. Another principle: if nothing fundamentally changed, volatility is information, not a verdict. Another one: the best opportunities always feel uncomfortable at the start. Silver right now is uncomfortable. That doesn't guarantee upside, but it guarantees attention. And attention is where money eventually flows. This moment is a fork in the road. One path is emotional, reacting, blaming, chasing certainty. The other path is strategic, learning, positioning, preparing. Most people won't choose the second path. They never do. But if you're still watching this, you already sense it. Something deeper than price. A sense of this move isn't random, that the system is shifting, that the next few years won't look like the last few, and that realization alone puts you ahead. Because wealth isn't built by predicting the future, it's built by understanding how systems behave under stress. Silver just showed you stress. What you do with that information matters more than the price itself. This is not about being bullish or bearish, it's about being awake. Awake to cycles, awake to psychology, awake to psychology, awake to how money actually moves. If you can learn that lesson now, in discomfort, you won't need to chase hype later. You'll already be positioned, and when the cycle turns, as it always does, you won't be asking what happened. You'll know because you were paying attention when everyone else was panicking. That's how people quietly separate themselves from the crowd, not by luck, not by noise, but by thinking differently. Here's the part most people never hear. The real danger isn't that silver fell. The real danger is believing this fall means the story is over. That belief destroys more wealth than any crash ever could. Because cycles don't end in one move, they reset. And resets are where the rules quietly change. After a sharp decline like this, the market does something cruel. It goes quiet. No excitement, no headlines, no easy signals, just boredom and doubt. This is where most people walk away. They tell themselves they'll come back when things look better. But when things look better, the easy money is already gone. That's how regret is manufactured. Years later, people say things like, I almost bought there. I knew it was important. I just didn't act. Not because they lacked information, but because they lacked conviction. Conviction doesn't come from predictions. It comes from understanding why things move. Here's the deeper layer most investors miss. Silver sits at the intersection of two worlds. One foot in industry, one foot in money. When growth slows, industrial demand weakens. When trust in money weakens, silver strengthens. That tension is why silver is violent. Right now, growth is slowing. Debt is heavy. Liquidity is tight. So silver gets squeezed from both sides. But squeezes don't last forever. Pressure always releases. The only question is where the release shows up first. History gives us clues. Whenever systems carry too much debt, policymakers eventually choose relief over pain. They always do. Sometimes it's subtle, sometimes it's loud, but the outcome is the same: more liquidity, weaker currency, hard assets repriced. This isn't ideology, it's necessity. And silver reacts after people lose faith, not before. That's why the best moments never feel obvious. They feel wrong, they feel early, they feel uncomfortable. And that's exactly why they work. Right now, the crowd is focused on the drop. Smart thinkers are focused on the setup. They're asking questions like how much selling pressure is left, who is forced to sell versus choosing to sell. What happens if conditions stabilize even slightly? Because markets don't need good news to rise, they just need less bad news. That's how bottoms form. Quietly, slowly, without permission. This is where thinking differently changes everything. Instead of anchoring to past highs, anchor to behavior. Instead of chasing certainty, build resilience. Instead of asking, will silver explode? Ask, am I prepared if it does? Preparation beats prediction every time. This moment is a test not of intelligence, but of temperament. Can you sit with uncertainty? Can you resist emotional extremes? Can you see opportunity without demanding immediate reward? Most people can't. That's why cycles transfer wealth not from the unlucky to the lucky, but from the impatient to the disciplined. This silver move is teaching a lesson far bigger than one metal. It's reminding you that markets are not fair. They are not linear. They do not reward effort. They reward understanding. Understanding that fear is part of the process, understanding that volatility is the price of admission, understanding that the future belongs to those who position early and wait. If you can internalize that now, this moment becomes valuable regardless of what silver does next week, because you stop being reactive, you stop being emotional, you stop being part of the crowd. You start thinking in cycles, in probabilities, in principles, and that shift, that mental upgrade is where real wealth begins. Not on the chart, not in a headline, but in how you see the world. This silver crash isn't the end of a story, it's a chapter break. And what you do after this moment will matter far more than what happened before it. Think long term, Think structurally, think independently, because the biggest gains never come from following the crowd. They come from understanding the cycle and having the courage to act before it turns. There's one final layer most people never reach. It's the layer where you stop asking, "What should I buy?" and start asking, "What kind of investor am I becoming?" Because every market shock is a mirror. It shows you whether you're driven by emotion or principles, by headlines or structure, by short-term comfort or long-term positioning. This silver crash exposed something important, not about silver, but about the system. A system loaded with debt cannot tolerate tight conditions forever. It can pretend, it can delay, but it cannot escape. History is brutally consistent here. When pressure builds too much, something gives. Rates fall, liquidity returns, currencies weaken, not because policymakers want to, but because they must. And when that shift happens, assets that were punished the hardest respond the fastest, not immediately, not loudly, but decisively. This is why the smartest people don't need to predict the exact bottom. They need to understand directional pressure. They position where the asymmetry is in their favor, limited downside relative to upside, maximum fear relative to fundamentals, crowd disbelief relative to long-term necessity. Silver right now checks all three boxes. That doesn't mean blind faith. It means thoughtful exposure. It means patience. It means accepting that the market will try to shake you out before it rewards you. That's how it works. Think about this moment years from now. Imagine looking back and realizing this was the point where your thinking changed, where you stopped reacting and started preparing, where you understood that volatility wasn't your enemy. It was your teacher. Most people will remember this crash as a warning, a reason to stay away, a justification for fear. A few will remember it as a lesson, a turning point, a moment of clarity. Those few will think differently about money forever. They won't chase hype. They won't panic at drops. They won't confuse noise with truth. They'll understand that real investing is quiet, uncomfortable, and lonely at the start, and powerful later. This isn't about silver alone, it's about how wealth is actually built. Slow positioning, deep understanding, emotional control. If you can take that from this moment, you've already won, regardless of what the price does next week. Because the market's greatest advantage over most people isn't intelligence, it's patience. And once you learn to match that, you stop being a passenger in the system. You become a participant. That's how people quietly separate themselves from the crowd. Not by luck, not by noise, but by thinking differently. This was never just a crash, it was an invitation to think deeper, to act smarter, to stop playing the same game as everyone else. And from this point forward, that choice is yours.